Okay, folks, good morning and welcome to Swing Trading Today. What we're going to do this morning is we're going to begin with the pre-market activity. Then we're going to segue over into Gold members' stock chart requests, which is where we review the symbols that our Gold members submit for me to review. Those symbols will be listed in the sequence in which I will review them below if you're watching this on YouTube and above if you're watching this on the blog. I do that just in case you want to skip around. Tomorrow, I will be sending out best stock charts, so if you're not on an email list, please enter your email address. We hate spam too. And to members on Sunday, expect to receive the week ahead commentary, which is our strategy for the new coming week, and that's between 30 and 40 minutes long. All right, so let's get to it. It is at current 6:11 in the a.m. Eastern Standard Time. It is the 9th of November. Happy Friday. Let's kick things off with the S&P 500 4-hour chart. These will all be 4-hour charts. Pre-market activity, we are down this morning by over a half percentage point. We found resistance at 28.20 on the 7th. We are at current trading down below support. This bar here, which is now breaching support, opened up at 5 a.m. So that's 1 hour and 11 minutes ago. We still have some time to recover lost ground here and to close above support. But if we close down below this support level here in red, Houston, we have a problem. Right now, we're flirting with it. This bar will close out at, I believe, 9 a.m. Eastern Standard Time. So we'll wait, watch, and see how we open up this morning. Now, if we break out above 28.20, well, then it's game on to the long side, to the NASDAQ. Pulling back this morning, we're down here about 3/4 of a percentage point. I didn't see any news overnight, but I did mention to members last night on Market Wrap and the night before, don't get too excited about the rally. I believe it's a dead cat bounce, and in all probability, we will pull back. And you're seeing that this morning. That doesn't mean we can't rally off the lows of the day and close positive. In fact, what you might be seeing set up here is a retest of the breakout point, meaning we found resistance back here on the 2nd, then again on the 7th, then again later on the 7th, and then we finally broke out the 9 a.m. hour on the 7th. This includes overnight trade, and we just jacked higher. Now, after becoming a bit overbought relative to the 3rd standard deviation Bollinger Band, we're pulling back and retesting. What is that? Traders are OCD. Traders are OCD. They have obsessive compulsive disorder. How do I know? I have it. I need to touch, retest a prior breakout point to ensure, to validate that it's for real. If it holds and we rally off of it, it's a buy, especially if and when we break out above the highs of the week. We're not there yet. The question is, do we hold this support level? If we fail, expect us to come all the way back down here and begin retesting support levels. It will not set up for a pretty week next week. Moving on to the U.S. dollar. Jay Powell's comments yesterday were somewhat hawkish, implying that the volatility of late in the markets has not hindered their decision to continue with rate hikes. December is on the table. The dollar is pulling back this morning, but net overall, it remains strong. The question is, do we take out 97.20 or do we put in the lower high and then begin to roll over? We were weaker earlier in the week, especially after the election. Does that mean that traders are embracing gridlock? It could be, but I think that what they are embracing more is the fact that Europe has a lot of problems. Let's take a look at the euro versus the US dollar. The euro has been very, very weak of late, especially with the events that are unfolding between the EU and the Italian government. Now, this 5-hour bar here, which opened up a little over an hour ago, we are seeing a reversal action. This does not mean that we are popping higher yet. We need to see a close above this resistance level at 9 a.m. Then I would become more optimistic. But right now, all we're seeing is a potential rally back. For all I know, this could turn red by 9 a.m. So I have no trade here on the euro. I remain skeptical until such time as we begin to put in higher lows and higher highs. We're nowhere near that type of price action as of yet. As for gold, we are down in the pre-market, just shy of a 0.5 percentage point. We were rallying back just about an hour ago, but we are now retesting support. You can see how we have 3 consecutive bars at support at the, let's call it 1218 level. This needs to hold. Now, yesterday, the gold miners were able to close up along with the US dollar, which is interesting. That's bullish stuff. That's a tell. That's the market sending you a signal that there's something fearful out there that's creating demand in gold despite the strength in the US dollar. Again, I believe it to be the European Union with the rise of nationalism in the EU countries and the bullying of the EU. I think that the entire bloc is in jeopardy in the coming years of simply dissolving. And if Italy departs, you can bet that the EU is, for the most part, done. So gold, holding support. We're looking for a breakout here on gold. Let's take a look at the 10-year Treasury bond note. It is up this morning. That means yields are pulling back slightly. I mentioned to members last night, using a weekly chart of the 10-year Treasury yield, we are at highs not seen since 2011. Have no doubt the breakout on a weekly basis, which I discussed last night, is going to influence the stock market and not for the better. So be very, very careful with these markets. Now you can see that the 10-year Treasury note, at least on this 5-hour bar, at current, we are trading above the upper band of resistance here in green. The question is, do we hold it or do we continue higher? If we continue higher, yields are pulling back. If we decline, that means that yields are rallying on the 10-year. Oil is a complete basket case. You can see that we were in an orderly downtrend channel. We have now broken down below this lower band of support. And now you're beginning to see some capitulation selling on oil. We're down about 1.25%, a little bit more than that this morning on oil. So if we get a capitulation sell-off here, we may have a very, very short-term swing trade to the long side. At this point, I wouldn't short oil just yet, perhaps soon, but it's a bit oversold on an intraday basis. So members, more to come here. I would rather wait for an extreme oversold condition and then trade it to the long side on a short squeeze. Okay, folks, now let's segue over and into members' stock chart requests. This is where we review the symbols that our gold members submit for me to review. And we have a bunch. And mixed in here will be a few watch stocks as well. And those are, of course, the trades that we are looking to put on for the coming week. And remember, tomorrow being Saturday, I will be sending out best stock charts. If you're not currently on our email list, enter your email address on the website. That'll be sent directly to your inbox. And on best stock charts, I will review, just as I will do right now, I will review the symbols that we are watching as we proceed into the new trading week. So let's get to it. PDVW Wireless. Never heard of it? This is a daily chart. What I like to do is begin, when we have time, with the weekly chart. What is our trend? Where are our resistance levels and where are our support levels? This gives us the higher level view. And I'm going to do that on, I think, all of these charts today. I have a little bit of time this morning, so let's spend a little bit of quality time here going over these charts. So on a weekly basis at current, we are above resistance at $43 per share. Good stuff, because the past couple of weeks it's acted as resistance, as noted by these wicks, shadows, topping tails, call them cupcakes, it doesn't matter. What it implies is that you have, or I should say, had resistance at $43 per share. And you can see back here in June of 2015, it acted as support. So we have some history at this level. Now, what concerns me is that as of the close Thursday, we were well off the highs of the week. We hit resistance of 45. Going back in history, you could see that you have buyers back here looking to get made whole. They've been sitting with PDVW for a couple of years now, few years now, and they've sat through this big sell-off and long consolidation, a false rally here which failed, and all they're looking for is their money back. They just want to get made whole. And so they will sell the minute that red entry on their trading platform turns green. So understand the psychology. Just because we're seeing selling right now doesn't mean we can't get through this resistance level. Resistance levels are meant to be broken, but it could take time. Now, on Ultimate Oscillator weekly basis, we have broken out this week. That's a good sign. So what I would watch for, before putting on a trade here, I would watch for whether or not we close the week out above $43 per share, or was this a false hope rally, meaning we traded above resistance intra-week, but we couldn't close there. And as I always teach members, it doesn't matter where you trade intra-week. What matters is where you close. That goes for daily charts. That goes for an hourly chart. No matter what time frame you're looking at, what matters is how you close out the period. Above resistance, below resistance, at support, below support. It's as simple as that. And always watch your volume. Volume is pretty good this week. So the weekly chart is looking interesting. I'd like to see how we close out the week. Do we close above $43 per share? That's the question I have on my mind. Now, on a daily basis, an interesting day yesterday in that we broke down, but we also broke out, right? So in the end, net, we closed within this triangle formation. So we are still holding the uptrend, a lot of volatility. So they tried to take it out, meaning resistance, but failed. I wouldn't buy until we got to close above, let's call it $43.92 per share. Because again, we know we have resistance above by looking at the historic charts. You wouldn't know that on this daily chart. There's not enough data. That's why you need to take a look at your weekly, monthly charts at times, sometimes quarterly charts. And buy in increments. Buy each time we close above the next resistance level. So PDVW, long story short, I'm bullish on. I think it looks good. I would, again, watch. Do we close above $43 per share? TMQ. Trilogy Metals, let's go to a weekly chart first. Where are we at historically? This is a really, really pretty chart. You can see that we closed above support here in August. It failed. Closed above it again here in October. It held, but the continuation rally the following week, it was negated. It failed. When they attempted to break it out, we closed well off the high of the week, so we went into a consolidation phase. And this week, we flashed a bullish reversal bar off of what is now support. It was resistance. So this is good stuff, assuming that we close how we're trading right now, and it could quite possibly be a buy. Now, RSI hasn't broken out yet. We have higher lows on Stoch RSI. Pretty stuff, daily chart. Now, on a daily basis, we have a breakout. We have a nice tight consolidation, good stuff. We have a breakout on RSI, Stoch's rising. Assuming that we close up on the day. We should close out the day with both lines on Stokes above the 50 level. That's a signal. And it's a bullish signal. Volume rising. Good stuff. I'm optimistic about TMQ. Very optimistic. TBPH. Theravance Biopharm. All right, so obviously some damage done here. We had broken out back here the week of July the 2nd. We pulled back, did a retest, rallied, continuation breakout. The week of July the 30th, consolidation, breakout. The week of the 24th. That breakout failed. We have now retraced the vast majority of this breakout. I think what we're doing here is we're probing for a retest of recent lows. Now, we could hold the week's lows, which were at 2302. I wouldn't be the least bit surprised to see a pullback to 2282. But we have rallied off the lows of the week, and if we close positive on the week, that is bullish stuff. So what I'd be looking for on a weekly basis is this. I would take my crayon out, draw my resistance level here. Do we break out and close above $26 per share this week or next? If we do, it's a buy. Volume this week is very high, but some of that is buying, right? We're well off the lows of the week. But for that to matter, we need to close positive. Daily chart. So on a daily basis, TBPH is looking good. We actually broke out on a daily basis yesterday. We had a reversal bar. I would check the short interest on these shares. Do we have the potential for a multi-day short squeeze? Is that our catalyst? Volume yesterday, very strong. We have higher lows and ultimate oscillator. I think we're moving higher here. Double top on ADX red. Higher lows on Stokes, a breakout on RSI. I think we're moving higher. I'm bullish on TBPH short term. And if we close above $26 per share this week or next, I am bullish longer term. Apple, weekly chart. We have a bullish key reversal this week. We have a significant amount of technical damage that's been done here. Let's update this. Let's identify where our resistance levels are, and we're right at it. All right, so I can't condone the purchase of these shares right now. Add to that, on a weekly basis, if we fail to close above 210 this week or next, and in all probability significantly above 210, maybe 215, both lines on Stokes will be trading down below 50 this time next week. That's bearish stuff. Volume is good this week. Daily chart. Now, on a daily basis, we had a dead cat bounce. I am not optimistic this is going to hold up. Let's throw a line up here, a couple of lines. So you can see that on the 1st of November, we broke out, but that breakout failed on the 2nd, and we closed down below real critical support at 212. We are now rallying back. I would not bet or hope that we're going to close above 212, 212.50. That is hoping when you should fear. Were I long of the shares, I would be selling into strength. I look to buy back on a close above 215 to even better, 217.50. I'd be a seller of strength here. I'm not loving this chart. ROKU, weekly chart. All I could say is this: avoid like the plague. Run. If you're looking to short it, well, there's an idea. It looks as though it wants to be shorted. It's begging to be shorted. Please short me. That's what this chart is saying. Because we rallied last week, a bullish key reversal. I'm not sure what the news is here, if they reported earnings. I'm just looking at the chart. This week, we are clearly breaking down. We blew out the support levels from the past 2 weeks. That is really, really bad stuff. That is bad. I mean, really bad. I mean, this crushes confidence because you have technical traders out there who see a reversal bar like this, and that's like a diamond jig to a barracuda. They're all over it. But this week, we undercut last week's lows and the prior week's lows, so that support level, if we close down below it, will now become resistance. I think we're coming down here to definitely the low 40s, 42.50, maybe 43, but I think we're coming down a lot lower. I honestly think that this support level here is in jeopardy if we close at the lows of the week or near them. Big volume this week. One trading day left to go. Daily chart. Yeah. All right. So, nice consolidation here. Good rally. We broke out on the 1st. They attempted a continuation rally on the 7th. Yesterday, that breakout failed. I don't know what the news was, but I'll bet you a nickel that there was some news yesterday on these shares. I think we're going lower. I would not be a buyer. Could we pop higher this morning? Sure, but I think that the rally will fade. I would not go chasing these shares until, of course, they close back above support at $51 to $52 per share. I would stay small with any long above that level because breakouts are failing here. We had a failed breakout over here. If you would have drawn your trend line down, this would have been a breakout. The subsequent day, it failed. Then you had another one here. Failure. That's not good. This is a weak stock, getting weaker. Do not hope when you should fear. Big volume yesterday. Obviously some news here. I would avoid, and these shares are quite possibly a short. Next chart up, Juniper Networks weekly chart. Beautiful chart. Outstanding. We have higher lows in RSI. Higher lows on Stokes, and we are breaking out. We broke out above this very stiff resistance level at $30 per share. Now, 30.70 is the next resistance level, and we closed at 30.67. So we're right there. Would I buy the shares now? No, because we're right at resistance. That doesn't mean I'm not bullish on them. It just means that you have sellers above right where we're trading right now. So you're accepting too much risk, not enough reward to put this trade on at this current price point. Now, longer term, there are probably many of you out there that were not trading during the dot-com bubble. This was a huge high flyer back then. And obviously we've gone into the doldrums here. I haven't even thought about Juniper in years. So let's follow up with where we're at on a historical basis. Wow. And this is the value, folks, of learning the charts, because when you learn to appreciate the higher level view, meaning weekly charts, monthly charts, and stop with the daily charts, stop with the intraday charts, use them as timing mechanisms only, you'll not get shaken out of trades as quickly. You'll keep your costs down by staying longer term with the stock, index, ETF, whatever you're watching that is in a longer term breakout. Now, what happened here, and this is the reason why I said wow earlier, we broke out back in September. We did a retest of the breakout point on the 1st. What's the breakout point? This is the breakout point. It's acted as declining resistance for years. We are now above it. This is a significant breakout on Juniper. I think that these shares in the coming months are going a lot higher, assuming that the markets, of course, do hold up. Now, on a daily basis, we're a bit extended here. Would I buy? No, because remember that weekly chart, we are at resistance, so we can't buy it now. We want to make sure that we're buying with the risk reward that's in our favor. Can it move higher from here? Absolutely. Will I be a part of it? Not right now. I would like to see a continuation setup form, meaning I want to see a pennant formation, a bull flag formation, form, and then I'll buy the breakout. So no need to get overly aggressive right now. I like the chart. If you need to scratch the itch, buy a couple of shares, okay, do it. Keep it as a small percentage of your overall intended allotment of shares that you plan on putting on relative to your overall portfolio. You can always add more on strength. Remember, you want to buy high and sell higher. So Juniper looking rock solid. Facebook. The last time I spoke about Facebook was a few days ago. We'll go to the daily chart first. Was back here. I predicted that we would rally. We got the rally. I think that rally in all probability is over now. It has failed. We broke out above resistance. Yesterday, we failed to hold it. Now, if we recapture 150 today, okay, then, perhaps this rally is salvaged. But right now, what I'd be looking for, while I'm looking to put on a long trade, is this. I would want to see a breakout and a close above 150 to 151 per share. Basically, I want to see a nice white body of a candlestick trading above and closing above, more importantly, above this upper band of resistance. Absent that, I'm not a buyer here because the path of least resistance at current is down. We're putting in lower highs and lower lows. So the downtrend, this correction, is not over yet. It has not been negated. Weekly chart, we have a bearish reversal week at current. For all I know, we can rally today, close at the highs of the week, and next week we could be setting up for a long trade. But as it stands right now, pre-market, Friday morning, this is not a stock I would want to buy. Canopy Growth, weekly chart, a good week so far this week, up 14 1/3% thereabouts. We are off the highs of the week. So what is the market telling us here? I don't need to open up a newspaper to see what the PE of Canopy Growth is. It doesn't matter. This is a speculative, high beta name. And what the markets are telling us right now is that we have support at $36 per share. We have resistance at $45 per share. That's all I need to know. Now, if we close above $45 per share, that's a sign of strength. I would be interested in buying the shares at that point in time. If we pull back and we retest support at $35 per share, I would be interested in purchasing those shares with a stop right below. But right now, it's in no man's land. In the middle of a trading range on a weekly basis, really good volume this week. That's important. Both lines on Stokes are weakening. In all probability, this time next week, they'll be trading down below the 50 level. Does that mean you sell your position? No, it means you raise your stops, though. Daily chart. Again, a nice rally over the course of the past 2 weeks. Now, on a daily basis, you have both lines on Stokes trading above the 50 level. That's bullish stuff. We pulled back yesterday, but that's expected. Expect a pullback to $40.68. We'll probably overshoot. But if we get a pullback and a rally and a close above $40 per share, that would be sexy stuff. I would entertain putting on a long trade there because we have support. Actually, let's call it $41 per share. We have support above. It was support back here at $41.15. It was support back here at $40.68. Let's see if it'll be support yet again. So Canopy Growth looking interesting on a daily basis, but a bit concerning on a weekly basis. Let's hope for a strong close of the week. EOG Resources, daily chart. So we broke out. I spoke about this last weekend. We expected a rally. We got the rally. I think that rally in all probability is over, and we're setting up for a short trade here. We broke out above this. Here, let's throw up a line here so you're not charged with visualizing. There you go. So we broke out above this upper band of resistance. We are now going to pull back and in all probability retest this breakout point. So I think we're going down yet again to 103, 102 per share. Honestly, I think we're going to ultimately break 103.63. If that happens, this is a short all day long. You have the 50-day moving average, which is now declining and picking up speed, and in all probability, it will take out the 200-day moving average, which is technically significant. EOG will be lighting up the scanners of technical traders all across the fruited plains when this setup occurs. That will be a short signal. Volume yesterday, very high. Let's leave off with the weekly chart. You can see that last week we were overdone to the downside. This week's pop higher was no shock, but you can see that 110 is stiff resistance. It was support back here in April, again in late in April, This is a weekly chart. It was support back here in January, the 110 to 111 level. I think that in all probability, if we close out the week as we're trading right now, in the coming weeks, we are going lower. I would avoid and quite possibly short the shares. And that is it for this morning, folks. Thanks for joining in. Don't forget that tomorrow we have best stock charts coming out to free visitors to the website. Premium members expect the week ahead commentary, which is where I review the health of the overall markets. And we'll do a deep dive into, just as I did, the weekly and daily charts, if not the intraday charts of the symbols that make it onto best stock charts for the coming week. If you want best stock charts, enter your email address on the website. We hate spam too. Don't forget about our 2-week free trial offer. Everybody have a profitable trading day. Be well.